Investing in real estate. Real estate investment is a method that may be both rewarding and profitable. Prospective real estate owners can utilize leverage to purchase a property, unlike stock and bond investors, by paying a percentage of the total cost up front and then paying off the balance, plus interest, over time. Even while a regular mortgage typically demands a 20% to 25% down payment, in some circumstances, a mere 5% down payment is sufficient to buy the entire home. Both real estate flippers and landlords are empowered by the ability to assume control of the asset as soon as the paperwork is signed, and can, in turn, take out second mortgages on their homes to pay down payments on more properties. Here are the top 5 ways investors can profit. Key lessons. Aspiring real estate investors can purchase a property utilizing leverage, paying a percentage of the entire cost now and repaying the remainder over time. One of the most common strategies for real estate investors to profit is to become landlords of rental properties. Flippers can generate money by purchasing undervalued real estate, repairing it, and selling it. Real estate investment organizations are a hands-off way to profit from real estate. REITs, real estate investment trusts, are essentially dividend-paying equities. Property rentals. Individuals with do-it-yourself (DIY) renovation abilities and the patience to supervise renters may find that owning rental homes is a terrific possibility. This technique, however, necessitates significant expenditure to cover initial maintenance expenses and offset unoccupied months. Real estate investment organizations (REIGs). Real estate investment groups (REIGs) are suitable for persons who want to own rental property without having to manage it. Investing in REIGs necessitates a cash cushion as well as access to finance. REIGs are tiny mutual funds that invest in rental real estate. In a typical real estate investment group, a business purchases or constructs a collection of apartment buildings or condos, then permits investors to purchase them through the firm, thereby joining the group. Property flipping. House flipping is only for those who have extensive knowledge in real estate valuation, marketing, and renovation. House flipping necessitates capital as well as the capacity to do or supervise repairs as needed. This is real estate investing's proverbial wild side. Real estate flippers are separate from buy-and-hold investors, just as day traders are unique from buy-and-hold investors. For example, real estate flippers frequently seek to financially sell the discounted houses they acquire in less than 6 months. REITs, real estate investment trusts. A real estate investment trust (REIT) is ideal for investors seeking portfolio exposure to real estate without committing to a traditional real estate transaction. A REIT is formed when a corporation, or trust, uses money from investors to buy and operate income properties. REITs, like any other stock, are traded on the major markets. Platforms for online real estate. Platforms for real estate investing are for those who want to join others in investing in a larger commercial or residential venture. The money is invested through online real estate platforms, often known as real estate crowdfunding. This still necessitates investment capital, albeit less than that required to own houses altogether. Online platforms bring together investors wishing to finance projects and real estate developers. You can diversify your investments with less money in some circumstances.